No cześć.
Dzień dobry, witam.
Dzień dobry.
Nie wiem, słychać w miarę odpowiednio tu i tam?
No jest.
Poczekamy na TGXEN-a. Nie wiem, czy tutaj nie jest za głośno trochę.
Nie, dobrze cześć.
Okej. There is TGXEN. Just give me a few seconds. I need to sort out a few things. One, two, one,
Good morning,
two.
guys.
Good morning, mic check. How can you hear me? All good?
Yeah, I think I hear you pretty good.
Yeah, alright. So yeah, awesome to have you here, man. Really cool that you found some time to hang out and chat. So I think we will keep it chill, just relax conversation, hopefully. Yeah, I have a couple questions. So let's start simple. Could you tell us a bit more about you, about yourself? What were you doing before you got into crypto, and what are you doing right now? Is anything outside crypto, or how is it going?
Yeah, so kind of the story how I ended up in crypto and what I was doing before. I've pretty much worked for myself since I've been around 20. I have a company outside of crypto that I still own and still operate pretty much 6 days a week. 6 years into the business, and which is, kind of unique because, or not unique actually, a lot of people say for businesses start to generate real revenue, it usually takes 5 years. And I felt a pretty similar thing for the first 5-6 years. I was reinvesting the profits back into the business to grow the business, to get more tooling, more employees, etc. And I got it to a point where I was happy with the size. And I didn't necessarily want to grow it much more, but, profit was still rolling in. And I wanted to find places to put that value to work. So I started looking at a lot of more traditional things like real estate and traditional finance, stock accounts, etc., diversified stock accounts. And what I found was what I was making off of those plays was either breaking even or slightly above or slightly below the inflation rate in the United States. So obviously this issue could vary depending on where you live, but I do believe if you look at any country, for the most part, it's kind of the same story, just a little tweaked, a little different. So then I was like, okay, well, by storing value in anything besides like your own business or in startups, is technically either just a flat line, there's no value growth, or sometimes even a loss. So I started looking at other avenues. And again, I wasn't too interested in reinvesting in the business that I was successful with at this time, just because I got it to the level that I was happy with, and it's still at this level. Like I still own this business and operate this business every day. And we're like 12 years in now instead of 5. But so I started looking at crypto, right? So Bitcoin and Ethereum were the main ones I was looking at. And I started storing some value there, and it was working decently well, right? It was actually outperforming the inflation rate, which that was the main goal. It was value that was working for me. It was increasing, and I didn't have to do anything, right? That's what's nice is you just put your value to work, and now you have other forms of income that isn't just your normal business or what. And if you can have multiple forms of income, it really helps you become financially free, especially if those forms of income don't require as much effort as some of, companies and stuff like that, depending on what you do, or just even working for someone if the pay is decent or not decent. I had a family friend find out that, I was into Bitcoin and Ethereum, and they reached out to me because they were a day one hex person. So then they spent some time and educated me on what Hex was and showed me that there's actually decentralized finance instruments on the blockchain. And I personally found that very, very interesting because it really sparked my interest. It was something I was looking for and I just didn't really know existed till I got that introduction. Really went down the rabbit hole, studied the product, and got into the product. And from there I said, okay, well, this is just one. Now that I'm down this rabbit hole, let me look at what other financial products exist. Not that Hex was bad or anything like that. I put some value there. And I had like a checkbox list that I was looking to hit, things I was looking for in investments or long-term plays. And I thought there was some more that I could hit in maybe possibly other assets. For an example, if you are long-term in Hex and you decide to stake, you have to create ladders to get paid a yield monthly or yearly. If you lock everything out long-term, technically you're not getting any divs off of that because your APY is also locked out long-term. So I was just looking for other products on blockchain that were decentralized finance products. And what I found was there really isn't that many that are a good price and actually decentralized finance. There's tons of good price meme coins that just die in a week, or projects that are startups that have a roadmap of promises that never get completed. But there was never like a finished product that wasn't already delivered and VCs gotten into and already like at $100, $200, $500 million market cap. They were all either companies, and the companies had tons of overhead and they were already valued at a really high price at launch, or they were startups that didn't really have anything going for them, right? There was a bunch of, in DeFi season last year, there was a lot of products that had utilities strapped to them, and it was a very utility-based cycle, but none of the utilities even needed to exist, right? And if no one needs to use your utility, there's no reason for your token then.
Yeah,
so,
all right. So what was...
Go ahead.
What was the biggest challenge you faced when building PTGC? What was the biggest one, in your opinion, of course?
Yeah, so what I started to do is I started studying like hundreds of products, not only on blockchain, but also in real life, what gave things value in real life, where people store value in real life, where people stored the majority of their value, for an example, like indexes and stuff like that. So that part was actually pretty easy because all of that information was there. The hardest part, I believe, in finding or in building a project is solving the demand issue. So even really, really good products that launch on chains, they'll have some demand when they launch, but in this industry, there's always new shiny objects coming out every single day. There's always, the new thing. Also, the industry is changing so rapidly. If you're not also evolving with the industry, you usually get left behind if you're not willing to adapt. So that was the biggest hurdle that I came across, and Richard actually talks about that hurdle too, so I kind of knew that hurdle was in front of us. We can control the supply, but it's very, very difficult to control the demand, especially in this industry compared to others. Like a standard business, your business is based on demand, right? You're offering a product, and if you have no demand, you have no business.
Yeah.
But you're offering a service that people need or want, so it kind of can work itself out where in crypto, this isn't necessarily the case for most products because most products aren't offering a service that people need or want. They're selling them the idea that they're going to become financially free in a short amount of time or a long amount of time. And a lot of them are the short amount of time scenario. And that short amount of time is usually the first week or month or, the first hype cycle it gets at launch. And as soon as that becomes not true, it just dies off forever. So the idea behind PTGC was to create the end all be all product, but we still had the biggest hurdle, right? This is the biggest hurdle that even the largest cryptocurrencies have. This is also the biggest hurdle that even blockchains have at times. Like, I think even Pulse Chain is struggling with that specific thing right at the moment, demand. If you don't have enough demand to pretty much go against sell pressure, right, your price goes down. And that's where we're at right now. That's definitely, I think, the biggest hurdle in the industry, especially because markets go up and down. And that was, I think, this is what I think has given PTGC so much success, that we actually found a way to mechanically drive the demand up long term.
So last time when Pulse Chain pumped, PTGC did about 10 times more. So PLS went up about 400%, and PTGC did about 4,000%. So why did that happen? For something like that to repeat, does PTGC need to hold ratio to PLS, or is it the connection alone enough, or how much liquidity in LP we need, or how much is enough, in your opinion? How much liquidity is enough for PTGC to more closely mirror its self-reference token movements like Pulse Chain?
Yeah, so a lot of people don't realize is to move even with Pulse Chain when it moves up or down, it's not the quantity of liquidity you have. Everything in that scenario is just ratio based. So, like, for a basic example, let's say PLS and PTGC were the same price. We're like 10 times it right now, but for this example, it's easier to look at it when they're the same price. Mm-hmm. And PLS goes up 10x. So if PLS went from 4 zeros and a 1 to 3 zeros and a 1, well, and PTGC and PLS were the same price, automatically PTGC would go from 4 zeros to 3 zeros and a 1. It doesn't need any buys or sells on the chart to do that. As long as its connected asset does that, and it doesn't need more or less liquidity to do that. It's all just a ratio. The thing is if you have more liquidity, if people sell into it, it makes it harder for it to go down when the assets are going up. If you have less liquidity, which this is like majority of products, because all products are for the most part bonded to Pulse, but there's a lot of just small nonsense products on chain, like 99% of products are technically just sinking ships. And when PLS goes up, the holders of those assets think that their value went up, but really it didn't. It went up in dollar terms, but not in PLS terms. So they'll sell into that. And since there's lack of liquidity, very, very easily it will go down and not go up with PLS. The thing that really makes PTGC stand out when PLS goes up is its sustainability and its longevity and its reason to exist. So if you have all these things like product market fit on a chain, when money starts flowing into the chain, PLS will start going up. And when PLS starts going up, that means money's flowing into the chain. And if you study how markets work, when money flows into the chain, a good amount of the money lands in the gas token, but a portion of the value trickles down to the sustainable assets that have product market fit at that time, at that push. That could be product market fit just because it's a pumping meme coin, because it's offering good yield, because it's, decentralized asset. There's tons of reasons why an asset can have product market fit, but it just needs to have product market fit and it needs to have more buyers and sellers. But when the value starts flowing in, it's going into Pulse, and then a portion of it trickles down to the assets that are meant to pump on the chain at that time. And that's what you've seen with PTGC is money flows in, they're buying PLS, we automatically get the price movement of what Pulse Chain's doing if that's a 4x. And then whatever value trickles down to PTGC in that event is an X multiplier, right? And that's what gives us those X's over the gas token when money's flowing into the chain. if people were selling in this event, and this is what happens with unsustainable assets, people that just want out, it's more of an X divider. Money's leaving at that point, which makes it so you don't do the X's that the blockchain is giving you. PTGC also has some things on the back end that help it outperform the blockchain, like the buy and burns from the automatic functions within PTGC, the buy and burns within the automatic functions within UFO, and the buy and burns that the DAO does at periodic periods as well.
All right. So can you just tell us a bit more about AMM bots on a pull chain, how they works, and maybe something else you just came up with that no one had done before, like maybe some unique feature or idea you are proud of, or is nothing like this behind it?
Did you say go into the X multiplier? You broke up a little bit.
Oh, no, I just said about AMM bots and how they works, and maybe there is something you came up with that no one had done before, like a unique feature or idea you are proud of.
Yeah. So the liquidity web structure with the fee on transactions, where the fee is going 100% back to the community and to the price of the token, is definitely, I think, we are the first ones to do this. And it was a way that we were able to mechanically drive demand and volume onto a system, even when there's no human interaction into the system. And this kind of goes back to what we were talking about earlier about, it's very, very hard to continuously have demand in a product on chain when there's thousands of products every single day coming out selling the idea of, hey, we're going to go up a bunch of X's in 24 hours, right? And this is what a majority of people are chasing. So you're up against pretty much just false advertisement, and it's 99% of the time not true, sometimes true. It's people just gambling. But we were able to find a way to use the AMM bots that are already on chain to drive the volume and the price appreciation of PTGC. And how we were able to do this is we created a liquidity web with the PTGC asset, and PTGC is connected to multiple assets on chain. So PTGC alone is an index of the blue chips on chain. And if you study markets, this alone is technically $1 billion idea, right? That's kind of the funny part. It's just being an index of the blue chips on the chain is $1 billion token idea, in my opinion. It's the biggest sector of finance, pretty much, is index stocks and stuff like that. So you would just think that there would be indexes here on chain as well. And the thing is the tokens that I've found that are indexes on chain don't operate in the way PTGC operates. They take value out of the token, and they go and take that value and invest it into other tokens, and then they kind of trade the gains and stuff like that. Where our asset isn't selling the asset at all or anything like that, it's bonding the asset with the other assets, creating a liquidity pool, and we use that liquidity pool to generate revenue, and we get all the gains of the things we are connected to. So it's a fully decentralized index. By just holding PTGC, you are actually exposed to all the blue chips on chain. You get the movements of Pulse, PulseX, Hex, Inc., PDI, Atropa, Most, Pump. There's even more, but those are the big ones. Even EHEX. And what we found is the only thing that the market can guarantee, so a utility that doesn't need human interaction, is the market moving up and down. So we turned the market moving up and down into a utility, and when the market moves up and down, let's say PLS moves down 3%, and then most token moves up 7% because people bought. Well, then that creates an arbitrage opportunity for market maker bots, and they'll fix the PTGC price in between the two liquidity pools. And when these market makers go to fix the price between the two liquidity pools, obviously for a profit for themselves, they have to pay the fee of the PTGC system. And then when they pay that fee to the PTGC system, that fee goes back to the price of PTGC.
Yeah, all right. So what will happen?
One question related to what you just described. I'm coming back to the history and the past. So what you just explained, because you have started on the Ethereum. What you just explained, was it not possible to be done on Ethereum, or Ethereum was just like a trial phase to move it later on the Pulse chain?
So the Ethereum thing kind of goes back to the main hurdle that was in front of us, is that there was the demand issue. So even though the product was very, very similar and it had a lot of the product market fit features that we were looking for in an asset as far as scarcity, and stuff like that, it didn't have the liquidity web because that information wasn't known at the time. And also what made this system very, very difficult to build on Ethereum is the fact that, for one, the main gas token of Ethereum was already up 1,000x. So you're missing out on one of the largest parts of the X multiplier. And then also there wasn't a bunch of assets to bond to create the web with that weren't also up 1,000x as well. So you could make the decision to bond to a bunch of new tokens that launch, within the same year and hope that those go up. But the thing is, 99% of tokens don't go up. So then you're just bonded to a bunch of, risky long-term plays that most likely won't succeed. When Richard pretty much forked and then launched all of his tokens, he didn't just launch one token. He technically launched 4. So we had Pulse, PulseX, PHEX, and then Hex obviously was around for longer. So we, from the start, had a bunch of assets that we could bond to, and then also had the opportunity to bond to some other somewhat risky assets. But since it was a brand new blockchain, there was less risk bonding with these new assets because they were the first on the chain, so they're most likely to succeed just because of Hart's Law and just, first mover advantage. And the other thing that made this system very difficult to be successful on ETH, which right now it might be able to thrive because they've currently dropped the gas prices of ETH since the launch. But when TGC was operating on ETH, literally just to claim, just to stake, was costing like $15, $20. That's how extreme the gas prices were on ETH. So Richard was dealing with the same exact issue that we were dealing with, is to have DeFi protocols on chain, it was actually costing too much money for the user to even operate. So it was making it to where you weren't even able to claim stakes because it was costing so much, and that's why Pulse Chain was invented. So when Richard was solving the problem that he was seeing with Hex on Ethereum, he was also solving one of the main issues for PTGC, which was the gas prices to interact with code on chain. Because in decentralized systems, there is a fee to interact with the code. It's the gas price. And if the gas price becomes too much for what the reward is for interacting with the code, the product becomes somewhat obsolete, So him creating this opportunity on Pulse Chain and us being able to migrate the community over here and, pretty much fork the code and do a few adjustments and bring it over here for the community didn't only help Richard for Hex, but it also helped us for our product as well.
Now it's clear. Thank you for the explanation. And I have just one more question regarding the past. So in reality, from the beginning, you and the TGXEN was like a front man in case of an interview, space, YouTube. Is it any other team behind, or you are just limited to few people or to 2 people? How many people were involved in the starting of the TGXEN?
Yeah, so myself was kind of the front leader as far as the person who understood crypto and stuff like that. I also was working with 2 people that I know in real life who technically are founders too. One of them has a very large cybersecurity background, and he was the one more in charge of the websites and stuff like that because I don't have a large background in websites. I'm just a crypto obsessed and value obsessed person. So I was more in charge of that. He was in charge of the website stuff. And then we had another partner as well who was in charge of just like kind of helping us connect the dots between the devs and us. Obviously, we had a dev team we were working with, auditing team. After the product was fully done and complete, when we were working on like, hey, how are we going to educate people on this product? I ran into Coach in a Spaces call, and we actually found out that we lived very close to each other in real life. So we ended up meeting up and just talking about crypto. I personally had never met anyone in real life that was as passionate about blockchain and crypto as me. So we hit it off just on that topic, and then I kind of filled him in like, hey, this is what I'm launching on Pulse Chain. Like I need people that, want to work with me and educate people on this system. Do you want to, it's launch, and do you want to get on board at launch and start educating people on this protocol with me? And he was on board, and just, such a big help to getting the word out there, because at that time, I didn't even have any following on social media. No one even knew I existed. So if no one, even though the product was amazing, if no one even knew it existed on chain, yeah, it would have done its thing and traded and gone up and gone up. But we know the human interaction, when humans come into the system, as we onboard more people, it amplifies the system that much more. So he was such a big help in that process.
Yeah. I remember very well, let's say, your first interview with Coach, with Crypto Kindness, when you started talking that you wanted to create one of the most, let's say, the best crypto in the industry. I think you are still keeping these promises, right?
That's the goal, right? Like, the goal is the end-all, be-all system that I believe a lot of people are looking for when they come to crypto. I think they resort to getting into products that they don't actually want due to them not finding all the boxes they're looking to check. Or the other thing is the delayed gratification part. Like, they get here and think it's going to come faster. And I think it is a longer process than some people believe. Like, even with PTGC, where we're at, right? We've kind of been going sideways for a few months, and we've actually went down since February. And that sometimes discourages people, but that's just how markets operate. And since we are a larger project, it's very difficult to pump up 5x overnight like a brand new meme coin might. So we might not be able to be in that sector completely, but I do believe we're checking every single box other people are looking for in a real long-term investment on chain, because myself went through that process, and I was looking for a specific product to store my family's value in long-term. That's why I came to crypto, and I did not find a product checking all the boxes that PTGC checks. And 100%, we are trying to be the end-all, be-all product that boxes for most users, right? Some users might have a couple other things that they're looking for, but even if that, like, we can still do tons of X's due to the X multiplier, even though we are the size we are now. And that's what's super unique about what being built here on Pulse Chain is I don't see X's being the problem if Pulse Chain is remotely successful, right? And then if you look at all the other fundamentals of PTGC, I do think it is an end-all, be-all product for users.
Carry on, Piotr, let's say, with your question.
Yeah, I would like to back to taxes, because PTGC, the protocol generates revenue. So what would happen if every single person or address, whatever, everyone started selling their yield every single day? What would happen?
Yeah, not much. So what's awesome about these APY systems, even though I know some people are discouraged about a fee on transaction, but the nice thing about the fee on transaction systems is the APY that's getting paid out is backed by an actual buy on the chart, or someone that was about to sell and just before they sold, the tokens got transferred to you. So even if you sold them, they were going to get sold anyways, right? So it's either happening on a buy or a sell. The user just bought, so it's a net positive buy before those tokens got to your wallet. So even if you sold it same day, right, it didn't actually do anything too negative to the chart because it just pushed the chart up that same, 24-hour period before. Even if you got those tokens from a sell, that user was selling and leaving anyways. They just went to you first, so you didn't really do any net negative damage. So all of the APY comes from actual interaction with the code and buy pressure on the chart. It doesn't come from inflation that can push the chart down further. A lot of people don't realize that if you kind of look at these systems like at zero and pretend there's no buys and sells, well, with PTGC, the only way you can get an APY is if it goes off of 0 to, let's say, 1. And then when you sell your APY, yeah, you could push it back down to 0, but you're still at the same place you started. With inflationary systems, if you get paid APY off of time and not off of value generation, even though you sit at 0, if you're receiving an APY that's not received from a value generation, you can actually push the numbers into the negatives from certain points because value is coming into your wallet that's not actually back from value generation. A lot of people don't realize that Bitcoin's been fighting this for the last 13 years, right? There's tons of supply that is getting into the market and being sold into market that isn't coming from actual buys on the chart. So it's something that you constantly have to work against. Luckily, it's halved so many times, it's not as extreme as it used to be, but that's really some things that have suppressed the price over time. For me, if price appreciation is the most important thing, you do not want to give out APY that's not justified by an actual value generation point on the chart. We actually took it a step further, though, and made it to where every time we collect fees, let's say that's 5%, 40% of that 5% is going to APY, but 60% of that fee is going to the value of the PTGC token. So even if everyone sold all that APY always, there's an additional 20% on every single fee that is going to a net positive of the value or the value backing the asset as well, really helping for the long-term sustainability. And I think it helps users realize, like, hey, if I've earned this APY, like, I don't have to feel bad about taking some profits out of this APY because that APY was justified by what I generated by holding up the price of this ecosystem along with the rest of my community members.
Alright, so let's say if PTGC were a business, right? What kind of business would it be? What kind of business? Like an exchange or something similar?
It operates very similarly to an exchange. Exchanges are generating revenue off of human interaction with liquidity and arbitrage bot interaction with liquidity. That's pretty much all an exchange is. So as users want to interact with the pools that exchanges have, the user has to pay the fee, and then that fee goes to the exchange company, right? Or even if someone buys a lot of a token in the exchange and the price of that token increases in that specific exchange, well, now a market maker can go and fix the price between the DEXs or other exchanges and that exchange to make a profit. Well, guess who also is making the profit in that event? The exchange as well, because they have to pay the exchange's fee. And then also the exchange holds all the liquidity as well, which is tons of value, where PTGC system has all that value back in the system. The interesting thing about this is these large companies, right, exchanges, or even if you look at other assets, like let's say you go into the top 100 cryptos and you look at, okay, these 10 are just grassroots meme tokens, maybe VCs involved that got early supplies, and then there's 90 companies. And these companies usually have a utility where a portion of that utility is going back to the asset, right? The token that people are holding. Well, PTGC operates in a very similar way as some of these companies because they have a utility. But what's different about PTGC is since it's decentralized and automated, it actually has absolutely no overhead. So 100% of the value that the utility of PTGC generates gets to go back to the system in APY and value appreciation like buy and burns or LP ads, etc. And that's what I think really gives PTGC a hedge against the rest of the market. Because once we get to this, top 100 range in all crypto assets, and that can come from just us being very successful on our own or getting a little bit of help due to the X multiplier by Pulse Chain and just adoption of Pulse Chain, we will be in the class of the top 100, but we'll be operating off of a system that has no overhead and utility with value generation, which is kind of in between both of those two sectors, like grassroots, community-driven, and decentralized, and then also company, but no overhead, which in my opinion is an advantage that's completely overlooked right now. And when we get there, it could really set us apart and keep us chugging up that list from 100 to 90 to 80 to 70 to 60, because we'll make our way going up. Because when we get to that size, the system's going to be generating more revenue and we're going to be growing. It's one of a kind.
All right, but also one more thing about bots. Do you remember what the bots were trading with at the beginning? How much money, how much capital was involved, and how much of your own funds did you or team put in early stage on to get things moving?
Yeah, so on PTGC, I don't recall the exact numbers, but it wasn't like a crazy amount. It was, I would say, maybe 50,000
total,
maybe
yeah,
a little bit more, maybe 50 to 100,000 value into the PTGC web at launch.
All right.
The huge, and this is estimates. I don't recall the exact numbers.
Yeah.
But one of the things that we've definitely gotten to take advantage of is we've been around for, almost 2 years now. Pulse Chain hasn't gone up a crazy amount, but we've been able to generate a lot of revenue via our system, just via the market going up and down, pretty much the utility that we've been talking about this whole time. So we've been able to add to these liquidity pools quite a lot. The DAO's been able to add to these liquidity pools. Also, the automatic function within the code that adds to the PLS LP pool. I've been just watching that increase every single transaction. You can actually see it increasing because the part that goes to the automatic, the part that's part of the automatic function within PTGC goes to a smart contract that kind of locks it in there. And you can see that number increasing in the pool size. It's like over 50% of the pool now. And I remember a year ago, it was like at 25, right? So it's slowly creeping up as being the main portion of the liquidity pool because it's happening on every single transaction. So, yeah, I don't think it's necessarily only about like how much we put at the beginning, but the fact that the machine is working so well that we've had this last 2 years to just continuously add. And I think the saying in the beginning was, remember the mission, remember the mission. The mission was, hey, let's get as much of these Richards tickers at these low levels as possible so our liquidity web is as stout as we can get it. And I think we've done really good about doing that. And I don't think that system is changing, right? Like as time goes on, we will continuously add to the liquidity pools, which ones we feel fit. When prices go a little higher than the bottom, we'll definitely add possibly a stable coin liquidity pool, which will be a great arbitrage opportunity for PTGC. That's one thing I'm very excited for, is when we do add a stable coin liquidity pool, when prices fluctuate up and down after that point, that stable coin pool will be a constant arb opportunity for market makers because it won't move around with the market, which will be a great value generation source for us. doing it right now doesn't make much sense because you'd be kind of tying us to an anchor at the bottom of the market. But if we can do it more in the middle range of the market or near the top, I don't know where the top is this cycle or what, but it will not only be a great value generation source, but it will also help anchor us towards higher levels. Not making a bear market obsolete. Like, I think you're crazy if you think you're not going to see a bear market, but it will definitely hedge us against possibly the downtrend a little bit, plus good value generation in the process.
Oh, yeah. Oh, I got it. So I also saw the post somewhere on X, I think. You were planning to launch a new LP with Ethereum. What is the goal there? Are you looking for more stability without stable coins, or what was the idea behind it?
Yeah, exactly that. Just a portion of the web that isn't as directly correlated with Richard's tickers. So this is one of the things that have been happening more recently with Richard's tickers that were a little different than I'd say the year prior. Last year, a lot of the community, I think, was rotating in between Richard's tickers, not being able to decide which one they believed would be the best performer out of his assets. So the first year of PTGC, we saw people rotate from Pulse to Hex, right? And then there was a huge value shift between those assets, which created value for us, right? And then Indecisiveness, I think, rotated that value from Hex to Pulse X, right? And then we generated a ton of revenue off of that volatile shift. And then we saw value shifts from Pulse X to Inc. And then, same old. And we saw this rotation going on, and we were obviously generating revenue off of this rotation. But more recently, I feel, and I think this is just due to the market not moving up recently. Like, this was kind of happening previously when the market was chugging upwards, and I think that happens when the market chugs upwards. But more recently, everything's kind of just been getting dragged around via Hart's Law on this chain. Not a lot of people are rotating their portfolios anymore. I think a lot of people's portfolios, they're kind of like, okay, this is what I have, and I'm kind of sticking with this. I have some bags I kind of move stuff around with, but I have my main bags figured out. So when everything moves up and down together, there's not a lot of great volatility, which then creates not a lot of great ARB opportunity for us. So what we're thinking is, hey, ETH is a good pair. We do believe it will move up here soon. Like, it's had the longest bear market pretty much against Bitcoin that it's ever seen since its launch. So it's technically should be undervalued compared to Bitcoin. We should get some price appreciation, and it's a little less correlated to the RH tickers than the RH tickers themselves.
Yeah, so also I'm thinking, do you think PTGC has the power to drag PLS up with it or not? Because we're talking like Pulse Chain can drag us up, but what about PTGC? PTGC has the power to drag PLS up or not?
PLS has a ton of liquidity with other assets. I still consider PLS very much the dog to the tail, still the tail. Mm-hmm. So in that point, I would say we definitely help in a way, but not as much as most people probably would think, right? Because of how many assets Pulse Chain is connected to. It's the main gas token on chain. I would say that one is definitely harder. But I do think we have the possibility to very much help out like Hex, right? Because Hex isn't the gas token on chain, so it doesn't have as much liquidity tied with other assets. So if you take the total amount of liquidity that Hex maybe has, and you look at the total amount of liquidity that PTGC has and how much is actually bonded together, I do think we can actually help some of the sub-alts on this chain that Richard has. Just maybe Pulse might be a little bit of the most difficult one,
Oh, yeah. All right. So,
Hey,
go on.
can I step in?
Yeah, go on.
We used to say like PTGC was the tail over the PLS chain, right? Like over this 2 years almost, and bigger and bigger liquidity making, PTGC is not the tail anymore. It's more like a left or right leg of the dog. So, because the second biggest LP on the pulse chain, so it's not the tail anymore. That's my conclusion over here. But anyway, I would just want to say hello to everybody. I can see some friendly faces. TGXEN, Mando, Gugat. Hey, everybody.
Yeah, I appreciate you saying that, because I couldn't agree more, right? It goes back to remember the mission, like what we were working so hard for at the beginning is to bolster up these liquidity pools, not only because liquidity is one of the most important things in crypto, but it's a value generation source for us as well. One thing I find fascinating, and we haven't yet gotten to see how this plays out, but when Pulse Chain starts going up, right, we know our system's liquidity isn't going anywhere. A good majority of it's burnt, tons of it's just in the protocol sitting there. So it's going to increase with blockchain increasing evenly. But are the other tickers on chain going to be increasing evenly, or will people be removing that liquidity? Because if ours remains relative even, or increases because we're adding to it, and the things that we're connected to, let's say, is provided by users in a farm, and people start pulling it for profits, or maybe Richard pulls some of it to make it easier to pump. With our system, since we're working off such a massive X multiplier, we don't actually have to pull these liquidities to increase our pump, because we're operating off of the pumps that Richard's going to possibly do with his assets, or also, people interacting with our system, and then also our liquidity is generating a pump for us due to its utility, right? So our liquidity is actually put to work instead of just being stagnant money sitting there. So I do have the question at times, like you're saying, like we started as the tail and we've worked our way up to being the leg. Well, at some point, will we have more liquidity than Pulse X? At some point, will we have more liquidity than Hex? Like, we might even have more liquidity than Hex right now, and that's what's amazing, right? Is we can actually see ourselves to have much liquidity as Richard's main tickers on chain.
I'm sorry to interrupt you. I think we've got already more than Hex and everything else on Pulse chain, except for stables. Because Richard pulled out like 9 of the 10, the liquidity. He left like 1/10, something like that. I don't know exactly the numbers, but he pulled out a lot of liquidity from farms.
Yes, 100%. I don't know the exact number too, but that's exactly what I saw. And we were talking about that before he pulled it. We said, hey, Richard's known for pulling liquidity while he's pumping stuff. We didn't know the fashion that he was going to do it, but we were saying, like, we predict this will happen, but we're not doing that because we don't need to operate off of pooled liquidity to get the X's that we need. And then right in front of our face, we saw it, which is awesome for our asset, because then the people who are holding PTGC still get to get the
exactly, and we'll
exposure of the X's.
We will get more just because of that, because he will try or want to put the assets into low liquidity blockchain, so the blockchain go rise very quickly at that time when you've got low liquidity. So our assets, like PTGC, was connected heavily and second biggest liquidity, bonded with all his assets, will rise like way faster. In my opinion, of course, because nobody knows for sure.
So looks like
this is what I think as well, Riddick.
Yes.
I
So
agree.
looks like PTGC own bit more cake, let's say, because there is much less liquidity on Pulse X.
It's the part of the cake to take.
Yeah, yeah. So anyway, it's been a while since I saw anything added to LP by DAO. Why did DAO decided in May, in last month, to focus only on buy and burning? It was like a month of buy and burning instead of liquidity.
Yeah, I think, we have a very decent amount of liquidity, and that doesn't mean that we aren't going to pay attention to that into the future. A lot of the reason is the PTGC asset has given PTGC so much success, right? The scarcity of it, the fact that it is tokenomics-wise very, very stout, and it has so much value to own. And we have been buying the Richard tickers for, we spent pretty much a year straight mainly focusing on these LP ads. And we kind of said, hey, we've spent a year focusing on these LP ads. Richard's tickers haven't moved us anywhere. Mm-hmm. Literally, they have gone down since the launch of PTGC. So we have tons of them. We have enough liquidity for the ecosystem. We are technically adding to the liquidity with PLS with every single transaction. Let's focus on the scarcity part a little bit of PTGC by buying and burning these tokens off the market, because the scarcity aspect of PTGC is also a very, very important portion of the supply and demand economics 101 idea behind the PTGC token. And we kind of neglected it for a little bit due to the extreme opportunity to take advantage of Richard's tickers at the bottom. And ultimately, we still have time. We didn't think we'd have this much time to be able to do as many things as we've got to do. But since this bear market on Pulsion has taken a little bit longer, we've had the opportunity to get more Richard tickers than we even thought we were going to by the time Richard's tickers left. We've also had the ability to buy and burn PTGC tickers at extreme discount prices, because you have to realize, when Pulse Chain goes down, when people sell into PTGC due to being in profits and whatnot, right, it creates a discount on the PTGC asset. We believe PTGC is extremely discounted at these levels. So, if we believe it's discounted, it does make sense to buy and burn at the discounted rates, right? Because we're getting more PTDC per PLS price.
Yeah, that's correct. I'm looking just only to PLS. I'm not looking to US dollars. It's no point to me. But also, could you tell us a bit more about DAO? How does voting work in practice? Do the biggest wallet always win? Or can smaller wallet get funds too? How it works? It's like a democracy, or the biggest one always win?
No, so how it works is anyone who's a top 100 staker can create a proposal.
Yeah.
So you are not able to create a proposal unless you are a top 100 staker. And the reason behind that is, as of right now, I think it costs a decent amount of value to get into the top 100. So anyone who can create a proposal actually has some skin in the game, and most likely they have PTGC's best interest in mind, right? Obviously there is a situation where someone with bad interest could hold a decent amount and act on that, but then very quickly we can recognize that wallet and say, this actor doesn't have good interest for the protocol, so we're not going to approve, the community, because all the stakers approve or decline proposals, would not let that guy get funds anymore if they're not acting benevolently for the protocol. And the idea behind this is for something to really be multi-cycle and to technically change asset classes, you do not want the control of everything being under one person, but you also want to be able to pivot and adjust with multi-cycle systems as crypto industry evolves, right? So if you don't have ways to pivot within code, you are stuck. And Banana uses the example that I love. You're a train on tracks. If there's a couch on the train tracks or a car on the train tracks, you have to just plow through it. You can't go around it. You can't adjust. But what this DAO gives our system the ability to do is it's like a boat on an ocean. We can go backwards, we can go right, we can go forward, we can go back, but it's done in a decentralized manner and an automated manner to where it's not trusted by one single person, but trusted by the entire PTGC community and trusted by the people who, hold a decent amount of PTGC tokens. They got skin in the game and they can make decisions. But no, it's not who has the most tokens. It's whoever wants to create a proposal can create a proposal that's in the top 100 stakers. Any staker can vote on that, judging by what they're saying in the proposal, judging by the actions they've done in the past, judging by what they have in their wallet, really anything. You can study the wallet and look into it. It's all on the blockchain. And it sits there for 7 days. And if it gets a 65% win, it gets approved, and then the person who created the proposal claims the funds, and then they carry out the proposal on behalf of the community.
All right. But what if some address doesn't follow the through in proposal? What happened then? Are they excluded from the future proposal?
The community would then make the decision to exclude that person from the future of creating proposals. So you then could say, this person didn't act in behalf of the PTGC ecosystem. I'm no longer letting him get these funds. You just vote it down,
Oh, yeah, I got it now. So, yeah.
And that's one of the reasons why there's a max of 100 million PLS per proposal. So we don't want it to where one wallet can access too much funds, and then you'd be like, oh, damn, like we lost out on a lot of funds because this person didn't act on behalf. If it is, it's a small amount of funds in the grand scheme of it's lost, but a lot of knowledge gained about that individual wallet. Not knowing who it owns, because most people don't dox their wallets, but all we need to know is that wallet address didn't act on behalf of the community, even though they acted like they were. So we now know this person doesn't have PTGC's best intentions in their their decisions.
Yeah. Also, yeah. I heard some. I think on your last spaces, or maybe 2 spaces before. I heard Mando mention that the DAO holds over 5 billion PLS token. What exactly that does mean? Are those funds being saved for something specific in the future, or did I misinterpret something?
Yeah, right now, so how the community of the DAO has been operating is we've kind of been using a management wallet to help us manage the funds, because not always right when the proposal comes due do we want to act on that, right? Like it kind of makes sense if we are to buy PTGC and burn it, it makes sense to do it at discounted PTGC rates instead of all-time highs, etc., or all-time highs of PLS, or possibly having reserves in case someone was to sell, etc. So what we started to do is we created a wallet that kind of holds some of these funds, and right now we have 5 billion PLS in that wallet as a reserve for the PTGC system that we can do buy and burns, LP ads. If a sell happened that was of decent size and we wanted to scoop it back up at the extreme discounted price, we can actually act on behalf of that. There's a lot of opportunities when you have a little bit of reserve of funds, and it's a kind of a precaution measure as well, instead of having an extra group of funds to help the protocol if there was a sell or if there was an LP opportunity, etc. We have a set of funds there to help the ecosystem at that time. Very similar, it gotten in a different way, just like we believe Richard has a reserve of ETH funds to help PLS in the future. This is not a sacrifice, but we have a reserve of PLS funds to help PTGC in the future as well.
So yeah, that's a really good idea, because at the moment, at current price, it's like $150,000. So I think it's a lot for project like PTGC. So.
Yeah, we thought it was a really good idea too. That's kind of why we put it together, and it's there for the community. It's there to act on behalf of PTGC. Even if PLS starts going up and PTGC goes up with it, well, then the asset's going up, right? If PLS goes up 3x, well, instead of 150,000, it's now 450,000.
Yeah, because you can use those funds in any time, right?
Yeah, we have used those funds. At one point, it was over, I think, 12 billion, and we saw some really good discount prices on PTGC, and we were buying and burning PTGC at discounted prices, removing supply and injecting that PLS into the liquidity web to work for the community.
All right. And beyond UFO, are you already thinking about another tool or another project to support PTGC? Because we know UFO is like a support token for Mothership, for PTGC. So are you thinking maybe about another one, about third one?
As of right now, I am not. I came out with UFO because the idea came to me, and I thought it was a system that I could add to the PTGC system that was unique, a brand new idea that's never been done before, and actually can make a real difference to the PTGC system. I do think when you launch more tokens, it does divide capital. It could also help bring in new capital, so there is a little bit of risk there. And I don't want to risk the divide of capital unless the idea of asset that we're bringing to the table is actually something that does feel could be like a new revolutionary idea, right? When you have PTGC and UFO, which in my opinion are revolutionary ideas as far as assets, if you bring anything else to the table, it does need to be in that same sector, in my opinion. I don't think it's the best decision for our ecosystem to just keep launching new tokens because it's easy to get demand when new tokens launch, because this is guaranteed. You could launch a new token. For example, I could launch a new token right now, and I bet it would have a good amount of demand at launch. But if it's not better or even close to PTGC and UFO, does it really make sense to launch it besides just hype for a few weeks? Like, to me, I just don't think that's the solution to crypto. I think, go ahead.
May I interrupt you for a second?
Go ahead.
That's why you just created those 10 addresses on UFO that has less than 1% of UFO tokens. If somebody, that's in my head, that's how I understood from the beginning. That's why you created those 10 addresses. If somebody creates the token that is the same or better as PTGC or UFO, you can create the liquidity with this one of those 10 addresses with those tokens in the future. Am I right or am I right?
Well, right now the OA holds 5% of the UFO asset, and that is being held there for possibly future endeavors of UFO, right? If a good opportunity presents itself for UFO, the UFO system doesn't have a DAO, right? So it doesn't have a system that can buy up its own supply and pair with other assets. So we do need different levers to pool to be able to make future liquidity pool webs. Is there gonna be assets that launch in the future on Pulse Chain? I assume there will be great assets that launch in the future for Pulse Chain that we do want to add LP with PTGC and UFO on. Is there a bunch right now? No, it doesn't seem like there's a bunch right now, but I do believe in the future there will be.
But let me understand, the assets that I created LP with on UFO, a closed contract. So you have to, like in the future, you will have to, or you would have to create LP outside of the smart contract only on Pulse X, yeah?
Correct, yeah. So when we create LPs that aren't in the farms, those LPs that we create, the value that those generate go to the providers of the farms and the token holders. The people who are providing LP in those are pretty much doing it as a donation to the system.
Yeah, that's what I want to know.
Yep.
Yeah, this is how I thought from the beginning, you know, because it's very smart that you left one door open with those 10 addresses for the future, because nobody knows the future, right?
Yeah, that's crypto for you, right? No one does know the future.
Exactly.
I don't think if anyone 4 years ago asked, would Pulse Chain be here right now? I don't think anyone would have given that solution as far as Pulse Chain, like Maxis or Richard Hart Maxis. But we are here right now. And it is awesome that PTGC and UFO have unique systems put in play to adapt to whatever situation is thrown at them. If it's new tokens coming out that are awesome and we can pair with them, awesome. We can take advantage of that and help the PTGC system with that. If it's a Richard stable coin, right? If, Richard has his own stable coin and there's something awesome with it that we can capitalize, we can actually do that. And those are just two examples, right? I have no idea what the future holds, and I would be lying if I did say. But we do have things in the PTGC system to adapt with the evolving cryptocurrency.
Yeah, that's now and addresses on UFO, in my understanding, of course. And everything we've got now is thanks to your brain, your smartness, your education, right?
Yeah, so like I have one funny question. If you had, let's say, unlimited resources, what would you add to PTGC next? Of course, you cannot change the contract, but just in theory, what would you like to add to PTGC?
With unlimited resources, I would say that we would do just what we've been doing. We would
just buy and burn
webs and to do the buy and burns. I look at what you just said is kind of the situation Richard's in, and I do think that situation is very unique, right? He has enough funds to do whatever he pleases, and I've asked myself, if I was in a situation similar to that, right, and it could be on a smaller scale because PTGC is such a smaller system than PLS, that would be like the equivalent of me having, let's say, $10 million in a wallet, and I can do whatever I please with it. Well, if we had $10 million in a side wallet of PTGC, what we could literally do is just say, hey, when the market starts moving, we can inject $100,000 every single day for
months.
What would that be?
Or years, whatever. Yeah.
100 days. I think 100 days straight.
Yeah, 100 days.
Yeah, 100 days straight, and either buying burns or LP ads. And what that would create is probably most likely a situation where anyone who believes in the system is financially rewarded, probably beyond their wildest dreams, and whoever sells early just gets bought out. And I tend to hope that Richard's going to do the same thing.
And probably would leave PLS, the whole chain as well, accidentally.
Yeah.
Also about probably everyone just remember the situation with PDAI. So is UFO planning to support PDAI in the future again? Like in terms of LP? I just remember that when the whole PDAI situation was still, let's say, unclear, it was stated that UFO wouldn't support it, but now things seems more transparent since the extractor is no longer there. Has that changed anything or not?
Yeah, it 100% has changed things. All we can do is take the information that is out there publicly and take it in and try to do what we believe is best with that information. The when that was put out, so we're working on a new DApp right now that has a lot of stats integration and has IPFS built into it, like Richard's been requesting.
That's
so
perfect.
The idea was never to change the old DApp, but we do plan on migrating to this new DApp, which just pretty much has a few cool graphs and stats and all the calculators built into it, plus IPFS for the dApps, so people can download the dApps to their computers, etc., and we can be more in line with what Richard's looking for. We were going to include PDI in that situation due to Richard pretty much telling everyone to remove liquidity, and there's this extractor infinitely pulling out of collateral vaults and just selling it, which was hurting the price of PTGC and UFO.
Yeah.
Since that time, a lot has changed, right? There's been the mint of all the PDI, the sell, and it created a bottom on PDI, and now it's been chugging up off of that point. We are not done with this DApp, so I haven't fully made the decision if the new DApp will support it or not. As of right now, it's looking like it will support it because now it's looking like it's just a meme token on-chain that community members are building Aave forks for, and obviously it's a very, very strong community, and that's mostly everything. But as long as there's not any more crazy situations where Richard again comes out heavily saying, pool all your liquidity, stop providing liquidity with this, we most likely will have it on the new DApp. But it is a situation that I don't have the answers for, right? If I had the answers for, I would obviously pivot us as perfectly as possible, and I'm just trying to take in the information like everyone else and do what's best for our community. And some people weren't very happy about what we did, but it was a de-risking situation for me. We were very, very heavily bonded to that system. It was a great value generation source, and the founder of the blockchain that we're built on, that I do trust, that I do believe is saying what's best for us, was asking us to pull liquidity. Again, if information changes, if Richard says anything else, if we get new information in, I will always adjust to what new information comes to us.
Maybe because he wanted to buy some more on the cheaper price.
Maybe speculation.
It could be anything, right? There could be so many different reasons, and I don't really like going into that.
Speculate. We can only speculate. We don't know that.
Yeah, we don't know what reason he said pull the liquidity. It could be so many reasons.
Zen, I think it's important for you to say that, it still does support it. The ecosystem has almost 70 to 80 million PDI within the PTGC ecosystem. The DApp still supports providing liquidity with PDI, with RH tickers if you wanted to do that. I think the most important part to remember from what happened back then was that people in the Pulse Chain community broadly were concerned with, if you had a lot of liquidity with PDI, that it could you're creating a path to value that can be extracted off of the chain, right? And that's really the biggest piece as to why we said, okay, let's all have a big meeting. And we did. We had a couple large spaces and a couple VCs. And the consensus was, for right now, even though it'll hurt us, let's have a consensus to say, okay, we're going to say it's probably the best thing to pull the LPs right now. But things change, right?
Yeah, because at that time it was better to be safe than sorry, right?
And it did. When we pulled it, even though it actually hurt some of our community members to pull it,
exactly. I know.
They actually saved their money because it went way lower.
Yeah, that's right. Yeah. Yeah. So again, the DAO, let's say, or people just said, all right, just let's make a decision, and they made lovely decision again. Also, I have a few questions. Probably we're already talking more than 1 hour, and slowly we will wrap up. I have one question about lock. Once our lock period ends, where do our tokens go? Do they go straight to our wallet, skipping the 1% staking withdrawal fee, or do they enter to regular staking?
Nothing happens with your wallet. So if you fulfill your time lock time, the time that you agreed to do via the contract, after you fulfill that, nothing happens to the wallet. Those tokens remain in the lock and continue to earn rewards off of that locking tier. So you don't need to close it down. You don't need to claim anything. Nothing has changed besides the fact that you fulfilled your agreed quantity of days. And now, whenever you decide to close that lock down, you do not get hit with the 30% penalty. But you can continuously, let's say you lock for 3 years, and you fulfill that time, 3 years has passed, you do not need to close it, you do not need to do anything.
Yeah. Oh, but if I decided after that period, whatever, 3 months, 1 year, or 5 years, and after that period, and I decided to close it or end it, where the tokens go? They'll be in normal staking or where?
Yeah, they are just in normal staking
right
now. Even when you're locked, they're still in normal staking because you're still earning on that normal staking. So what it does is it just unlocks it, and now it's sitting in normal staking. And then if you wanted to go from normal staking to holding, you have to withdraw it, and there is the 1% fee when you withdraw it, even if you lock. It doesn't matter how long or short you stay. That 1%.
Yeah, because anyway, tokens never leave our wallet, so that's really good idea in PTGC. So we are not sending tokens to one smart contract like Honeypot or whatever. Like tokens always stay in our wallet. That's really good idea.
Yeah, I think it's one of the features of PTGC that is stronger than people realize. The fact that we were able to create the single-sided staking and APY with everyone still keeping complete self-custody of their assets. It helps PTGC for a reason of now we're not this shining light on a hill of a contract that has possibly 500 to billions of dollars in one smart contract. Because the thing is, if you put all this value in a smart contract, it now becomes a prize for hackers, right? You don't want to create a prize for hackers of 500, 100, $1 billion, because then they'll spend their lifetime trying to get into that smart contract. So everyone's value is best in their own hands for their own purposes and for PTGC's purpose as well, because we want it all spread out amongst the users of their own wallets, because then there isn't one contract for a user, for a malicious person to try to go after.
If I may, one more thing.
Yeah, go on.
I'm sorry, I'm interrupting because I don't like interrupting somebody. TGXEN, you have to remember when you say things like that, you have to remember to say something like that, because liquid staking that you've created is so powerful in the people's mind, like especially with hexicans and like people that used to stake their tokens for like limited time of like 1 year, 2 years, 5 years, 10 years, whatever. So liquid staking is very innovative, very creative. So it's very on plus for everybody.
Yeah, you can claim your yield every single day in any time in Hex. That's why I swapped. I think nearly 1 year ago. I think it was August, the beginning of August, or maybe July or something like that. I just swapped everything from call coins to PTGC because I just like that idea, liquid staking.
Liquid staking.
Yeah,
liquid
because
staking
in any time,
the best idea.
Yeah. So also as we slowly slowly wrap up. Today I just saw some cool news about PTGC is giving back the 5% tax. How does that work exactly? Who sends those funds back and where are they coming from?
So the OA is going to be sending those funds back. And what we're doing is just for, it could go a little bit longer than the 24-hour period, but what we're doing right now is we've had a few people, over the years say that they don't like getting into fee on transaction tokens because they just don't want to pay the fee. So what we're kind of doing is a fun promotion right now is for, it pretty much is $500,000 of $500,000 or this 24-hour period, and we might make it go a little bit longer. We're giving the 5% rebate back. So if you come in with $5,000 or more and you buy in a whole number, so it has to be in 10 million increments, and this is just so we can keep track of it because, there's our bots and stuff like that we have to look over. But if you come in with $5,000 or more, in the next few days, we will send you the 5% that you lost in the fee transaction. We will send you back that 5% in PTGC tokens, pretty much making your entry fee-less in ways.
Oh, so I really like that because you have to pay tax for transfer, right? Anyway, because you have to pay tax. So I like it.
When we send it to the user, the OA is excluded from any fee. That's how the code's written, and it's renounced, so you can't be changed. So when we send them back the 5% that they lost in buy, that won't be that won't have a 5% fee to that. But really, just the idea behind it is it gives users the opportunity that are kind of not into the fee and don't fully understand it, the opportunity to still get a position in. And possibly it's not only about the new users, it's also about our existing community members because it's an awesome opportunity for existing as well.
It's basically marketing, right?
Yeah, also marketing, yeah.
Yeah, of course. So I think, all right, that's everything from my list for today. So it was really, let's say maybe not quick conversation, 1 hour, 20 minutes, I think it's all right. So I really appreciate your time, and I'm sure the community does too. So yeah, I think let's keep in touch, and hopefully we will chat again soon, because it was the first one, but not the last one, hopefully. So yeah. Really interesting thing.
Yeah, I don't know if you're up to it, but maybe moving forward we can do this once a month or something like that, and kind of just keep giving updates and see where we go from here.
Well, yeah, of course. I was a little bit stressful, let's say. My English is not maybe perfect, but I'm trying. But yeah, hopefully, once a month sounds good. Yeah, that's right. Yeah, if you can find time, we can talk a little bit about it. Probably we will be saying same things because nothing can change in PTGC because the smart contracts are locked and nothing can change. But situation on a market or on a pulse chain always can change because it's crypto. So yeah, that's fine. Once a month, that's all right.
I think that Richard was promising it something happen which in less than 2 months. So actually we'll have some topics to talk about.
Yeah, maybe. Yeah. So we will see, because I think we need to wait 60 days since, I don't know, it was 7th of May, something like that, like 2 months. I don't remember the dates, but we'll see. Maybe something happening in next month. So, yeah.
Anyway, I think it will be good to keep it 1 per month.
Pardon?
No, anyway, I think it will be good to keep 1 per month. The quick chat, let's say, ask for the question. I think is another educational.
Yeah, yeah. I will try to sort some things in my life, and maybe I will make some videos about PTGC, and of course we will be doing like spaces in Polish language as well. But once in a month, in different language. Why not?
All right, man. Well, thank you very much for having
Yeah.
everybody on.
Thanks, Mando. Yeah, thank you.
Appreciate it.
Thanks
Thank you.
everybody for coming in.
Thanks for conversation.
Thank you.
Thank you. Sila.
All right, see you guys. Bye.
Take care.
See ya.